I'd like to talk about Carson Block and FTX, but I'm told you're coming on to talk about the markets and inflation. So with that said, Mary Daly kind of throwing water on the old Fed pivot, Barry. What's your take?
Oh, I'm not sure she really threw water on the pivot so much. First of all, I've been describing it not as a pivot, but when you hit that rate of change point where they slow the pace of hikes and then eventually they'll pause, I'm not actually in the camp that they're going to be cutting in 2023. I think they're going to stop sooner than most market participants expect because of some of the things that Daly mentioned, her talk about the labor market starting to cool, her focus on goods prices, because of what Lael Brainard's been talking about, financial conditions. We just had a 20-year auction. I'm sure you'll go to Rick Santelli about it. It was particularly strong. But just before CPI, we had a decidedly weak 10-year auction. So we still have that market functioning and financial instability issue to deal with. But ultimately, what I've been penciling in with Steve's survey, Steve Leisman that is that the Fed pauses sooner than most people think, but then actually finds themselves tightening again in the back half of next year. That said, that path from 9% CPI down to 4% through the end of this year and the first half of next year should be a very favorable period for equities and for treasuries, for that matter. And that's really, for most people, what we should be focusing on right now.
Yeah, I go all the way back to 1995, back in the old days. Took a horse to work, and the Fed raised rates. I think it was 2.5%, 250 basis points, 2.5% in 1994. In 1995, the Dow rose, I think it was 33%. I'm going off memory, so maybe off a little bit, but you get my directionally correct comment, Barry. My point is, just because the Fed is raising rates does not mean the stock market cannot still go up. I think I said like 8 negatives, but you get my point there.
Yeah, I talk about that period all the time. I was actually taking a ferry to work in those days across the World Financial Center, but pre 9/11. But the S&P went up 37% that year. You're exactly right. And the real inflection point came after the 75 basis point hike in November. They then did another 50. They never really announced a pause or a pivot until June of that year, but they just stopped with the process and the stock market exploded. Tech led the way. Banks went up 55%. The banking sector looks very similar in terms of price to book, valuation, and return on equity as it did back then. And the market exploded through that period in 1995 when Greenspan was giving speeches about they may have overdone it and there's a recession risk. So that the dynamic is pretty similar to 95 when the Fed funds rate was hiked from 3 to 6, as you acknowledged. So that's a pretty good analog period for people to think about.